As I said before, y'all, it's buy. When it comes to long-term treasuries, we might be at the top. Let's go over that and go over how we can make some money. But I hope all is well, y'all. Another beautiful day in the neighborhood. We're in Jacksonville. Painful Problems with your CFP, Mario Payne in beautiful Jacksonville. I talked about how inflation is up like crazy and how long-term bonds might be the play. Treasury bonds, that is. And look who else is saying that. Huh. Somebody's paying attention. Oh. I like the music, y'all.
Treasury yield still flirting with 5% level. Surpassed that level.
Brad got a mean part, don't he?
For the first time since 2007.
First time since 2007. Think about that, y'all. This don't happen that much. Treasuries are up that much from a yield standpoint short term.
Thursday of last week.
So breaking all of this down, what exactly this means for investors, the issues that investors have right now with the market when it comes to the yields that we've seen a massive rise, a 10-year right around 5%.
Moving above 5% is a major barrier. We have
major barrier.
Been there since before the financial crisis.
Facts.
And it's a big round number. It's a
big round number. Pause.
Big round number.
Pause.
The people are going to get scared.
Look at this, y'all. 2016, with the Fed funds rate was at 5.25%. What's the Fed funds rate? That is the rate that the Federal Reserve pushes from an interest rate standpoint. So when the Fed raises rates, the Fed funds rate go up. When they bring rates down, the Fed funds rates go down, right? And we know we was at 0% in 21. No inflation. Now inflation is crazy. They pushed the rate up now to 5.25 to 5.5%.
From a little bit more factual standpoint, we notice that stock valuations tend to be positively correlated with yields up to about 5% and then negative thereafter. So
right. So hence why once we broke the 5%, the market's been going down since July.
Real reason to start thinking this is going to have an impact. But at the same time, when you look at valuations, almost all of the S&P 500 stocks are still fairly reasonably valued.
Yes, and we want to buy low and sell high, but we're going to tell you about something from a Fed's fund rate standpoint, since it is at 5.5%, that can make us money over the long term.
The exception are the big seven. So when you look at that from a valuation, from a yield standpoint, the risk isn't nearly as great as people might think.
The 10-year does not often go from 375 to 499 in a very short period of time.
It doesn't. And that, my friends, what we're going to talk about here in a second. But I love the music right now.
If we start to see stabilization in rates, I think you guys have a good stage for a rally in Q4. So yes, stabilization to a slight decline in the long-term 10-year rate would be a phenomenal backdrop for stocks, I think.
Let's go. Phenomenal backdrop for stocks. Hey, y'all. Santa Claus rally. November, December, January, the best 3 months of the stock market. Y'all better be prepared. Back to the music.
To what's been happening in the Treasury market, as we can see on the Wi-Fi Interactive, this top line is representative of the yield curve. This purple line right here, we are not far off of that today. A couple weeks ago, we were at this blue line, and a month and a few weeks.
Inverted yield curve. That means the top left, 1 month, 3 month, 1 year yields at 5.6% is higher than the 30-year at the bottom right, which is 4%. My friends, that's what you call a recession when short-term rates are higher than long-term rates. We are in a recession. Nobody wants to announce it, but it's been like that really for the last year and a half. But with that being said, my profiteers, this is how we can profit. Let's go to the charts. My profiteers, TMF, Tom, Mary, Foxtrot. This is basically 20-year treasuries, the value standpoint, and more. Now, as a certified financial planner for my clients, I make recommendations on these YouTube streets. Take the information, not telling you what to do. However, though, look at this here. Down, baby. From June 2020 to now, it's down by 93%. The Fed fund rate 2 years ago was at 0. Now it's up to 5.5%. And we know the Fed's decreasing eventually. Who knows when though? 6 months, a year, 2 years from now, we don't know. But 5 years as my long-term investors, let's just say the Fed funds rate goes from 5.5 to 2.5. They cut it in half. That means this is going to make back half of what it lost, my profiteers. What is that, Mr. CFP? Well, let's go back to where it was January. January of 22, that is a 700% return. Whoa there. Are you telling me that I'm going to make 700% in this fund? I'm not saying that. I am saying when the Fed decreases rates and inflation goes down, this, my profiteers, is going to go up. And how much? Let's just say 500% in 5 years. How much is that, my profiteers? Well, my profiteers, we look at the time value money calculator. Let's say we got $10,000. No, 1,000. Just like that. Put my toe in it, $1,000. And let's say it takes 5 years to get back to where it was in January. So it took the Fed 5 years to go from 5.5% to 2.5. Yeah, shouldn't, but let's just say that. That's 100% a year for 5 years. My profiteers, good Googling and Moogling. Now you're like, okay, 1,000, 32,000. That's not a lot of money. What? On $1,000, you 5x your money? You make 100% a year in 5 years? Huh. 10,000. Now you want to be diversified. Talk to your certified financial planner, not me unless you're a client. But $10,000 equals $320,000. We know the Fed is going to lower the Fed rate, and we know inflation is going to go down. I'm saying 5 years. If it's longer, it's longer. If it's shorter, more money. On $10,000, we look up in 5 years, we have now $320,000. That's a long-term investment. That, my friends, is how the profits is painful, but they are profits. So, my profiteers, I love the music. I love more giving information. Again, take with the information as you want. For my clients, we're looking at it. Are we in it yet? No. If inflation keeps on going up a little bit, especially with the war, you might be able to get in at a lower price. It was as low as $3.85. If it goes down more, it was as high as $25 a share January 2022. So you go from $4 to $25 a share. That is a more than 500% return. But comment below what we think about TMF. What we think about inflation. What we think about the Fed's fund rate. Is your boy right? Timestamp me, because in 5 years, if we're swimming money showers, you know why. But love is love, y'all. As always, let's make some paper promise together. Peace.
And you just wanna get paid, tired of making the money mistakes. Make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making the money mistakes. Make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you knowing it could be different, you knowing.